Hey guys, what's up? Alec back with the daily stock market, and look at that. Tesla up 3.2%, leading the pack, higher than the S&P. If we dive into Tesla, we can see in the last week they're down 5%, and they've been going through swings up and down. So we'll dive into Tesla in this video. We're actually going to do a full electric vehicle stock market update. So Tesla, NIO, ChargePoint, Lucid. Make sure you stay throughout this entire video so you get an update on all things electric. Now, this is a bonus video, so it's going to be a short one. It is Saturday, so I hope you guys enjoy this video, me going out of my way on Saturday and making a quick video for you guys. Without any further ado, just smash the like button, subscribe on YouTube before we start so you're not missing out on any full-length videos. And now, without any further ado, let's dive right into it. So first up, we have Tesla at $178 per share. People are worried about Mr. Elon Musk focusing too much time on Twitter. There's also talks of Mr. Elon Musk finding a new Twitter CEO and also, more importantly, finding a new Tesla CEO. So yes, there is whispers going on right now about a new Tesla CEO coming into the mix, and he's saying that the teams over at Tesla are doing so well right now that they barely even need his guidance anyway. So it's not going to be a huge change in leadership. And if we did see a new Tesla CEO, it wouldn't be a huge change in the company at all. He's going to find someone that aligns exactly with what he believes in anyway, and is just basically going to be a second Mr. Elon Musk. Okay, so that's something interesting to look forward for Tesla. The stock could react down and negatively on news that there is a new CEO. So this could be a buy the rumor, sell the news kind of thing. Now, we also see just in the last 3 months, Tesla's gone from $300 per share down to $173. So it's spilled around 42% just in the past 3 months. Is this a buying opportunity, or is Tesla still overvalued? We're going to go over that in this video and see exactly what's going on. The last time Tesla was even around these prices was around 2020. In my opinion, I think we will see Tesla under $150 per share. So I'm personally going to put some price alerts at $155 per share and be alerted when those go off. Now, if we scroll down, we can see that Tesla has a PE ratio of 55, which is one of the lowest PE ratios that Tesla's had in recent years. So it could be a huge buying opportunity right now. Also, with that PE ratio of 55 is pretty good for something like Tesla. Considering the moat that Tesla has and the competitive durable advantage in the EV electric vehicle space that Tesla has a market cap of $560 billion. Okay, it was a $1 trillion market cap earlier this year. I want to see that closer to $300 billion if I'm going to be picking up a lot of shares of Tesla. Tesla is a stock that I believe in the most over a 10-year horizon. I think that they can grow to extreme numbers with Mr. Elon Musk by their side. If you guys remember to 2020, remember that's when Tesla was unprofitable. They were not making a profit at that point, and they were basically trading at the same price that Tesla is trading at nowadays. And we can see that Tesla is now an extremely profitable company, putting an EPS around $1. Okay, so earnings per share around $1 per share. And we can see that they typically beat analyst expectations, well, at least in the last 4 quarters they have. And a little side note, we have the next earning date for Tesla on January 25th, so mark your calendars. Now, this is an interesting article talking about since taking Twitter private in October, Elon Musk has drawn tremendous amount of negative attention from the press, analysts, and investors alike, especially from Twitter. Tesla, which has become linked to Elon Musk in the market's consensus at least, has suffered as a result of the drama engulfing on Twitter. Tesla's brand and public image may have been damaged by Musk's recent behavior and public statement, putting its growth narrative at risk. Musk's Twitter distraction has pulled his focus away from Tesla, heightening the electric vehicle maker's already severe key person risk. Tesla will likely continue to be the narrative impacted by Twitter overhanging for the foreseeable future. So honestly, it makes sense for Tesla to have a new CEO just so people can't spin narratives like this, okay? Even if Elon is not distracted with Twitter and he's still focusing fully on Tesla, there's always going to be people in the press and writing articles just like this one that we have in front of our faces here. So therefore, if Tesla has a new CEO, then they can't point a finger at Mr. Elon Musk and blame him for damaging Tesla's public brand image like they are here, saying that Tesla's image has been damaged due to Musk's recent behavior, putting its growth narrative at risk just because Twitter is a distraction, pulling his focus away from Tesla. So if there was a new CEO, that would nip this all in the butt, and Elon wouldn't have to worry about articles like this and people worrying about the growth of Tesla just because Elon wants to focus on something else. And the thing is that Elon stressed, he said, the teams are good at Tesla. They barely even need my guidance at this point anyway. So therefore, I think there's a strong probability of seeing a new CEO at Tesla, which will hurt the stock's price dramatically in the short term, in my personal opinion, triggering it to go under $150 per share and closer to $135, $125 per share. And if Tesla gets that 135 or below mark, that's when I'll be buying a lot of shares of Tesla personally. Okay, so let's talk about Lucid a little bit. Ticker symbol LCID. Lucid Group was a hot IPO back in 2020 in October. They IPO'd and instantly, just from IPO, they shot up 400%. So obviously they were the talk of the town. They went on to fall around 62% from highs and then recovered another 200%. So lots of people made money with Lucid Group during the IPO, and a lot of people also lost money with Lucid Group. So whether you're on the latter or the former, let's dive into Lucid Group a little bit and see what's going on. If there's a risk of bankruptcy, right now it's under IPO price, and that was 2 years ago. If we scroll down, we can see that Elon Musk, in a rare move, says the Tesla rival is not long for this world. So this was an interesting article. A weak economy has prompted EV companies to adjust prices and offer promotions to stimulate demand. This strategy definitely has an impact and can pressure margins and in turn the bottom line for companies. Okay, electric vehicle startup Lucid Group, which reported a dip in reservations in the third quarter, is going all out to prevent further cancellations, multiple reports said. What happened? Rival Tesla CEO Elon Musk Friday weighed in on the development. Lucid has changed its procedure to canceling the cancel of vehicles. New emails sent to employees reportedly suggest that they should proceed with the objective of saving an order when a cancellation request comes in. So they're being very aggressive on cancels right now. So if anyone's canceling their Lucid purchases, they have like 6 follow-ups. Okay, such requests are being handled at 3 levels: a case owner, a manager. After the case owner fails, it goes to the manager, and if they still want to cancel with the manager, then they escalate it to the regional manager, each of whom will be striving with salvaging the order by contacting the customer within the first 5 days. So imagine trying to cancel and you have to talk to 3 different people over the course of 5 days. Okay, so that's absolutely insane. We also see that Lucid's offering a 10% discount to customers who ordered a Grand Touring after prices were raised. Employees were also reportedly given $18,000 discounts for 2022 model Grand Touring before the end of the year. When Drive Tesla shared the report in a tweet, Elon said they're not long for this world, apparently suggesting the luxury EV maker will go down under or bankrupt. So there is a huge risk of bankruptcy with Lucid, and you have to understand that if you are a Lucid investor. That would be my biggest concern right now. If Elon Musk, who knows the in and outs of the electric vehicle market, is saying that there's a chance that, Lucid is going to be going under, especially if you're a long-term holder or you own a lot of shares on Lucid, you definitely have to consider that. And I would say if Lucid even got back up to $13 per share, sell your stock and run for the hills, because there is a chance that Lucid goes bankrupt. And right now, it's higher than ever, especially with all the news and new findings that are coming to light about Lucid. trying to preserve every single sale, giving all these discounts going on. That's going to hurt their bottom line at the end of the day. And looking at their balance sheet is going to help us determine whether they're going to be going towards bankruptcy. And it's not looking good because just in the last 5 quarters, they've taken on extreme amounts of liabilities from about a year ago. Okay, so 2021 Q3, they were 21% debt to asset ratio, only 1.29 billion in liabilities, 6.1 in assets. And fast forward 4 or 5 quarters to 2022 Q3, we can see that they have the same amount of assets, but their liabilities have grown by over 2 times, over 100%, and now their debt to assets closer to 53%. So what you can do as a Lucid investor is keep an eye on their balance sheet, make sure their liabilities aren't creeping higher, and make sure their debt to asset ratio isn't going above 60 to 80%. That's going to even be more of a red flag than from this current conversation. And we haven't talked about ChargePoint in a while, so let's talk about them pretty briefly. Now they're down 7.8% just in the last week, 14% in the last month, and down 39% in the last 3 months. Okay, this has been a good swing trade for us in the past, making lots of money since IPO, up around 350% from its IPO, and then selling off from there. But every time it dipped in the past around 40%, there was good swing trade potential every time it dipped in the past. Can we say the same about the future? Is the stock going to at least jump back to around $15 per share, $14 per share for a 14% swing trade? Or is ChargePoint dead in the water and they're due for bankruptcy as well? So let's kind of scroll down and see what's going on. The first article we see is from simply Wall Street, ChargePoint Holdings, a third quarter 2023 earnings misses and expectations. They just reported earnings, by the way, this week, so they're kind of a good one to go over. Revenue was up 93% from quarter 3 2022. They're not a profitable company still. Their net losses were 84 million. Losses were widening by 22%. Wow. And that's what the stock market cares about right now, is net losses and losses per share, which it looks like they amounted to around 25%, 25 cents per share on losses on their EPS, further deteriorating from Q3, which was only 21 cents losses on their EPS. Okay, so they are just getting worse and worse at this point. Okay, we can see that their net income is getting a little bit better from 2020. Now they're only losing 132 million, but the last 5 years they haven't become a profitable company, so we were expecting them to become profitable by now. So personally, I'm staying away from them for long-term investing and swing trading. If we scroll down, we can see that they have grown their assets tremendously. Okay, at one point in 2020, their assets to liabilities were, the debt to asset ratio was 106%, meaning they had more liabilities than assets, which is the biggest red flag out of any stock market long-term value investor would see. However, if we stop looking at the annual and we look at quarter over quarter, we can see that their debt to assets are rising very dramatically, okay, with in 2021 Q3 with 316 million in liabilities. Fast forward 4 or 5 quarters, 4 quarters to be exact, and we see 66% debt to asset ratio with 660 million in liabilities. So this is getting kind of scary for ChargePoint into bankruptcy as they take on more liabilities and more risk. Okay, now we have seen them recover in the past, going from 300 million in liabilities in 2020 all the way down to 160, but now they're back up on their liabilities. So personally, I'm not risking it with ChargePoint right now. I'm staying away from them, especially as their debt to asset ratio grows, their liabilities grow. If we see their debt to asset ratio above 80 and their liabilities closer to 800 million or even 1 billion, that's going to be a huge red flag for bankruptcy on ChargePoint. So I hope you guys enjoyed that quick video. We talked about Tesla and we talked about 2 potential bankruptcies in the stock market that could happen over the next few years and to keep an eye on. If you enjoyed that video and think that one of your friends will find it helpful or is an electric vehicle investor, share this video with a friend. And also, if you want to join my close friends list where we do a lot of option trading and short-term trading, we also do value investing, long-term investing, and swing trades, but we make a lot of money on our option trades, our short-term ones. Go ahead and message me here on Instagram at the Daily Stock Market. Now over 185,000 followers, 633 posts. Been doing this for an extremely long time. Over 2,000 current students and over 600 positive testimonials. So if you want to see some of the success yourself, go to my highlight section, click on success number 6, click on success number 5, read some of those for yourself. You won't see the green ones that say the close friends list because that's for close friends list members only, but click on success number 6 if you want to see some of the results that people have been having in the last few weeks. If you fast forward to the most recent ones, also last week and the week before, you can see that people just consistently make money in this program. So if you want to develop your skills and turn into a more advanced stock market trader, message me here on Instagram. Thank you guys for the love and support. Share this video with a friend, and I'll see you guys in the next video. Remember, don't time the market, buy the market. Peace.